Hi there, it's Mark Sebastian, founder of OptionPit.com, and this is the Stock Market and Option Volatility Report. Reminder, this is for education purpose only. Should not be considered investment advice. Options carry risk. Consult a financial professional if you have risk, if you have questions. Um, so uh, we're coming on the closing weeks before our summit. It is going to be on the 4th through the 7th of June. It's going to be a great time. The VIP is basically sold out. I could slip in one or two people, but basically it's full. We have room in the general audience, so just the 6th and the 7th, that's a Thursday and a Friday. Lots of great education, lots of great talking. We're going to teach you a bunch, and you get to hang out with me and Andrew. You get to hang out with Leisha Leslie, the chief operating domo of OptionPit. Get to meet Big Blonde Hair and debits and credits. And you gotta come out and hang out with us, and you'll learn. It's $300. Come on, you spend more on that in dinner over the weekend when you go to Olive Garden with your kids. So get your butts to Chicago. Speaking of getting your butts to Chicago, not a great day for the market. We have the S&P 500 down, 65 points as we're speaking. Yet, interestingly, take a look. All right, well, let's just do a rundown of the indexes. The SPX is down almost 2.5%. The NDX is down 3%. Why? Apple is getting absolutely face punched. The Russell 2000 down almost 3%. And the diamonds, the Dow Jones is down about the same as the S&P. Caterpillar getting face punched. John Deere getting face punched. Apple. So all the names that people associate with trade are getting punched. Probably a little over the top. It doesn't really seem like a great like a lot of this is justified. Yes, China adding 60 billion in goods being taxed. So let's do some math here. 60 billion. The U.S. economy is $20 trillion. We import from China 500 billion. All right, so we're talking about tariffs on 10% of what they actually import. So it makes you wonder whether this is maybe not quite the big deal that we were making it out to be. And the answer is it's not. What really the reason for selling off is does this decrease the odds of doing a deal? And the answer is probably not. They have to do something, the Chinese, and that's where a lot of this news is coming from. But take a look at VIX. And I'm just going to go to the 1 month chart here. And despite how ugly that today is, we're nowhere near the highs in VIX. Nowhere near. All right, VIX futures are not either. VVIX, nowhere near the highs. And so, while almost everything is red today, you have to ask yourself, okay, well, how long are we going to be red? We've seen this game before. The SPX is low, right? 28.17. Barclay's pretty smart with those puts. But you have to wonder how much lower we're gonna take this. All right. So that's really the key to everything. We've got a kind of a weird inside day, but as I look at stuff, we still have, on top of China, we still have Walmart earnings this week, Cisco earnings this week. That could be kind of fun that I'm gonna maybe look at. But as I view, I don't see us down 2% by the end of the day. I think that you're going to see probably a real shift lower in vol, and probably some greenness as the day progresses. I don't know if we'll get unchanged like we did Friday. I mean, Friday we were down 50 and ended up 10. Friday's close. Look at Friday's range. Friday's range was 28.90 to 28.20. It's a 70-point range. So I think we've got, it could be really interesting kind of how much we really sell off today and whether it gets bought. My gut says that that's potentially in the cards. All right, everybody, have a great day, and I will talk to you soon. Again, go to Option Pit and get yourself signed up for the event, and that's on our events page. Have a good one.